Did the Fed just greenlight a bull market? Let's jump in, take a look at what is going on. Jay Powell spoke today, and a lot of people expected him to come out strong against the markets. He did not. He reiterated his softer tone and his softer message of disinflation. So the Dow reacted up almost 1%, NASDAQ or S&P up 1.29, NASDAQ up almost 2% at 1.9. And let's break down what Chair Powell said. He said the disinflationary process, the process of getting inflation down, has begun, and it's begun in the goods sector, which is about a quarter of our economy. The central bank chief said during an interview today, but still has a long way to go. We're in the early stages. He talked about the labor market, and he said the reality is we're going to react to the data, as he always says, data dependent. So if we continue to get, for example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise rates more than is priced in. Neel Kashkari came out early today and spooked the markets by saying, we're not done. We're going to have to continue raising rates. And he was talking the market down a little bit, but Powell came out as the good cop. Neel Kashkari was bad cop today. He said, we expect 2023 to be a year of significant declines in inflation. It's actually our job to make sure that's the case. He said, my guess it will take certainly into not just this year, but next year to get down to close to 10%. He said, we need to be patient. We think we're going to need to keep rates at a restrictive level for a period of time before that comes down. His message, his first mention of disinflationary trends was in his post-meeting news conference Wednesday. Markets latched onto that, meaning inflation is coming down, slowing the pace of inflation. He said, our message at the last meeting was this process is likely to take quite a bit of time. It's not going to be smooth, he said. It's probably going to be bumpy. And we think we're going to need further rate increases, as we said. And we think that we will need to hold policy at a restrictive level for a period of time. The markets loved it and took off because he is reiterating that he thinks inflation is coming down. So the same Fed that said there was no inflation, it was transitory, we weren't going to have any issues for so long, and we're late to the party to react to try to get it down, is now saying that it's coming down while we have housing prices coming back again. The housing market is still strong. Automobile prices are coming back. Fuel prices are going up. So, and the labor market is still super tight. So it'll be interesting to see how all this plays out. But for the meantime, the markets do not believe the Fed is going to be restrictive as long as they say they are. They're still not quite pricing it in. He did say the markets have not priced in the reality of what they're going to have to do. So that's where we're at today. It was a good soft tone, just like the other day from Powell, and we shall see. So here's the thing. We could be potentially putting in a bottom area here as long as inflation comes in check in the next report for January. We should get that next week, I believe it is, the CPI print. And if that comes in, confirming disinflationary continues and that continues to soften, then this could be the range, bottoming range for the markets. And of course, a number of things could affect the valuations in stock markets in terms of earnings and things like that, and other types of things that generally affect markets. But from an overall standpoint of a deep recession, the markets do not and are not pricing in that there's going to be a deep recession. The market seems to think that we're going to have a soft landing, that inflation is going to be coming down this year, and that the Fed is going to stop and or pivot by the end of the year. So that's basically what the markets are pricing in. We haven't had a lot of change in price action from yesterday, kind of still ranging in those areas. The VIX reversing, the dollar reversing a little bit today, but the 10-year still marching up and moving its way upward. Last time it was at this level was in December, end of December, when it hit the 3.9 level. And what did that look like on the S&P? December was right in this area. So that was a lower area. So as 10-year continues to rise, if the dollar rises, then markets could retract a little bit. Let's take a look at Bitcoin. And again, the all still in this range. And obviously the big thing that a lot of people are looking at on Bitcoin is this moving average cross here. Don't know, that just follows price action. So it's not something that causes anything. None of the moving averages, none of the indicators, none of those things cause anything. They trace and track price action. So as price action moves, the moving averages move, and the longer term averages take longer to move. So that is on the weekly, still well above all of the daily moving averages. So Bitcoin could carve out its little path here, carve out a bottom in this area, as long as markets continue to remain stable, as long as inflation doesn't rear its ugly head again, and as long as we don't get any kind of a deep recession or severe recession and things like that. And with the labor market as strong as it is, with the economy as strong as it is, it's kind of hard to contemplate without some sort of something popping up that nobody sees or nobody's talking about that could create some sort of a deep recession. It's just the consumer is still strong. The labor market's still strong. Housing prices are shooting back up with the interest rates coming down a little bit like they did. I've seen properties go under contract in days, once again, at prices that are just, distorted levels still. We're seeing used car prices go back up. New car prices are still high. So we're going to waddle along here, peaks and valleys, and it's going to take a while for wage growth to catch up to inflation. But at the end of the day, we always have inflation. It's always higher than what they're reporting in terms of the cost of things and how they go up compounded over time. So that's just something we're going to have to deal with. So it'll be interesting to see how this all plays out. But in the meantime, the markets could be trying to carve out a little bottoming range here and move on to the next levels and try to retest those previous highs. There's a lot of capital out there on the sidelines that needs to allocate, that needs to be invested. So that's what's going to keep markets moving as long as the Fed is starting to slow down their process. So we got a big week ahead next week with the inflation report. And, that will give us an indication. We had a strong jobs report. Earnings across the board are decent. The economy's still humming along. And if inflation, comes out soft, then markets are going to react to that exponentially. So it'll be a lot of fun to watch. But in the interim, if you're new to this channel, this is what I do. I talk about all things entrepreneurship, real estate investing, starting, buying, building, scaling businesses, investing in real estate, developing real estate, investing in stocks and crypto. So it's all about creating cash flow, creating wealth, protecting that wealth, growing and scaling that wealth so that you can pass it on to generations. So that's what we're all about here. Entrepreneurship, real estate investing and development, stocks and crypto, leadership mindset. I've got a lot of great playlists with a lot of video content. Go check it out. And I will see you in the next video.